That's fine. Prayers, let's pray and start. Good afternoon, Honorable Chair. I ask you to report that the quorum does exist for the Standing Committee on Public Enterprises to commence business.
Thank you, Clerk. It has been reported that the quorum does exist for the Standing Committee on Public Enterprises to commence business. Those in favor, please say aye. Aye. Those not in favor, please say no. The ayes have it. Can someone move a motion for us to adopt the agenda? Any second that?
Seconded, right?
I will remove and second the as it is. Those in favor, please say aye. Aye. Those not in favor, please say no. The ayes have it. Nice is this opportunity to extend a warm afternoon greetings to the governing board of Gnpc and that of the senior management here in present, and that of the independent audit firm with us here, esteemed members of this reputable committee, with our subject matter specialist, representative from the national audit, who is the director of the state of enterprises, and our able technician who also happened to be described for this committee. We are indeed very much happy and we appreciate your compliance in terms of your annual engagement with the National Assembly Standing Committee on Public Enterprise. We hope and strongly believe this relationship will grow from state to state, since we are two sides of the same coin, completely inseparable. Our job here is not a witch hunting, is to help one another to improve upon the status quo of the institution, so that we can attain value for money, and also in fulfillment of your core mandate. As you may be aware, we are politicians and we get our core mandate from the electorate. That may include you people. So we are partners and we are here to have a frank discussion about the report that we are going to be taking. So be aware that today is only presentation, and it will start in this way from the activity report to financial statement and management letter. So the management letter, the independent audit firm will do that by talking about the audit opinion, and we can go through the management letter adverse audit findings that are captured here, only to be presented. And later you will appear again for consideration and possible approval. On that note, I will allow the clerk to come and administer. Yeah. Before we go to the administration of oath, I want us to do the introduction. I will start with my humble self as the Honorable Chairman of this committee. I am Lamin Jesane from Brikama South.
Thank you very much. Good afternoon to all of you. I am Honorable Bileji Tunkara, the Majority Leader of the House and also Vice Chair of the Committee, member for Katuna Constituency.
Good afternoon, Honorable Salih Joka, member of this committee.
Good afternoon, Lamin Sisi, member for KOS Constituency.
Assalamu alaikum, Honorable Alman Jiwa, Foli Councillor, member of the committee.
Good afternoon, Sir Shah, member for Jusma.
Good afternoon all. I am Alhaji Omar, subject matter specialist for the Trade Committee.
Good afternoon, my name is Bubakar M. Jallo from the National Audit Office.
Good afternoon. My name is Brahma Jal, a clerk to the committee.
Good afternoon. Good afternoon. My name is Tamara Gere, a clerk to the committee.
Mr. Chairman, the button is passed to you so that you can also introduce your member.
Thank you very much, Honorable Chairman. We're very grateful, myself and the delegation that I'm leading, for your kind invitation to come and dialogue with you on the operations of Gnpc. Gnpc is a state-owned organization, and you are the representatives of the people. So you own Gnpc. And we are here, and we are hoping that we'll have a very constructive dialogue, as you indicated. It's not you against us, but we are looking forward to a collaborative effort so that we can know going forward what we can do to improve our performance. I'm hoping that when we come to the question and answer session on Wednesday, we'll be very open to each other, we'll be very honest to each other, so that we can map a way forward for the future prosperity of Gnpc. Thank you very much. Let me ask my MD, Mr. Babu Karjai, to introduce
yourself.
Okay, sorry. My name is Momodu Semo, and I was appointed chair to the board in May 2023. So I wasn't around when the 2021 activities took place, but it doesn't matter. It's still my responsibility as board chairman. Thank you very much. I'll now ask my MD to introduce himself and also introduce the other members.
Good afternoon. My name is Babu Karjai. I'm the Managing Director of Gnpc, and I joined Gnpc in October 2022. Thank you.
Good afternoon. I'm Mohammed Jawara, Deputy Managing Director. I joined GMPC in September 2022.
Good afternoon. My name is Patu Jain. I'm the legal manager at Gnpc. I joined the corporation in October 2022.
Good afternoon. My name is Augustus from Junior External Auditors Augustus Brown.
Good afternoon. Good afternoon. My name is Ali Job, the Final Director of Gnpc.
Good afternoon. I am Suleiman Diaw, Senior Finance Manager at Gnpc.
Good afternoon. My name is Ibrahim Bak, Senior Accountant, Gnpc.
Good afternoon. My name is Mohamed Sani, Director of Internal Audit, Gnpc.
Good afternoon. I am Lamin Kamara, Senior Procurement Manager, Gnpc.
GPPA. Introduction.
Good afternoon. Mohamed Sane, GPPA.
Thank you all for the wonderful introduction. The next item is the administration of board. So the clerk will be coming. Mr. Chairman, all those that are going to be part of the presentation will be on the oath. So he'll be coming to administer the oath. Yes, let anybody who is going to talk, he will choose them, he is coming, and he will do it once and for all.
I, Mohamed Senor,
do hereby affirm that
do hereby affirm that
I will speak the truth,
I will speak the truth,
the whole truth,
the whole truth,
nothing but the truth.
nothing but the truth. So help me God. Thank you.
Honorable Chairman, we want to seize this opportunity to confer an honorary title on your name. Due to the level of compliance and the manner in which you present your report. All the reports are confined in one book. I think that makes the job very easy for us, rather than coming with different copies. So we hope and strongly pray you will maintain the strategic preparation of the report that you are doing. So based on that, we have conferred the honorary title on you now. So we can start with the presentation of the report, starting with the activity report.
Thank you, Mr. Chairman. I will encourage my staff to maintain the standard, even improvement for the future. Thank you.
Thank you very much. Mr. Chair, committee members, subject matter experts, representatives from the National Audit Office and EPPA, my own chairman, and the staff of Gnpc. On behalf of the Gambia National Petroleum Corporation, Gnpc, I want to seize this opportunity to give highlights of our activities under the year 2021. Gnpc, as you all know, is a parastatal. It started business in 2003, and it was incorporated in 2014. And currently, we operate in 3 different segments. We have upstream, we have midstream, and we have downstream.
Mr. MD, can I observe? If you are going to your presentation, if you can give page number, so that we can be at the same page with you.
Okay. Would you want me to go page by page? Because I was just speaking in general terms of the activity. But I can turn page by page if that is going to be helpful.
No, it's okay. Go ahead what we are doing. You just summarize, make a summary of this.
Yes, thank you. Like I said, we have 3 different segments. We have downstream, we have midstream, and we have upstream. The downstream business segment is our trading segment, what otherwise known as the OMC segment, because we are an oil marketing company, and during the year under review, we were operating 10 service stations which were strategically located, and a major accomplishment that we had in 2021 was the construction of a flagship station at Bosubi. And in addition to that, it's also noteworthy that during the year under review, Gnpc had under its tag 10% of the total market share of the distribution of petroleum products in the country. A major milestone that we've registered during the year under review is the solarization of our service stations. We have a solarization project, and in our quest to support the global energy transition, we installed solar panels that provides the energy needs of all our petrol stations, including the petroleum house itself. On the midstream segment, we have a significant investment in Gun Petroleum Storage Facility. We have a $128 million investment, which accounts for 12% of the overall investment at the Gun Petroleum Storage Facility. And by default, we sit on the governing board of Gun Petroleum Storage Facility. In the upstream business segment, Gnpc, together with the Petroleum Commission and the Ministry of Petroleum and Energy, consistently work towards promoting Gambia's oil blocks and by extension our potential oil reserves. In so doing, Gnpc during the year under review have tried to acquire our own oil blocks, because ideally the ministry, those bidding rounds supervised by the Petroleum Commission, in order to woo in potential investors. But practice as it obtains in sister countries like Ghana shows that the national oil company can apply through the government to have or acquire its own oil block. And then when we do that as the business arm of government, we believe that we would have a comparative advantage to woo in international oil companies to come in, as against being administered by the ministry. So in a nutshell, Gnpc would apply to the government of the Gambia through our line ministry to have an ownership right to an oil block, and then in turn we do our marketing efforts to bring in IOCs, international oil companies, and then farm out for exploration and development of our oil blocks. So this has been ongoing during the year of the review. And another milestone is also the data center, because exploration and production cannot go without adequate data. And this data gets processed to information, valuable information for that matter, which they can rely upon to attract international oil companies into the country. So we've been working tirelessly to establish this data center. And then once it is up and running, all relevant data relative to oil and gas can be easily accessible by international oil companies, and we hope that it's going to skew their decisions to enter the Gambia favorably. In the terms of human resources, we've been training our staff, because we have very specific skill sets as far as Gnpc is concerned. And during the year under review, we have staff who were in Russia, in Ghana, in Malaysia, UK, and Germany pursuing different academic endeavors. On that note, I'll hand over to my Director of Finance to do the financial presentation. I mean, that is the numbers. Oh, just one more thing before I close. During the year under review, we've highlighted a big challenge, and that was procurement. The sector that we operate in is a very peculiar sector. And unlike our sister parastatals like Social Security, NAWEC, and BPA, which are monopolies, Gnpc is not a monopoly. We compete with private businesses. And what happened, the procurement and supply and distribution of light fuels is our lifeline. This is where we make our money. But what happened, when you take a classical example like Jar Oil, Oryx, they can see a very, very good deal in terms of supplies of petroleum products. And within an hour, they can farm out this deal, which works very well in their favor. Number one, we are not a monopoly. Number two, because of GPPA procurement requirements, we cannot make instantaneous decisions when it comes to procurement of our lifeblood. And this has posed a very, very significant challenge to Gnpc. And this challenge still remains the same. Even though we are not mandated to go to EPPA, for every procurement. Recently, I think they improved by allowing us to do the procurement and then, perhaps get a review periodically, but it still stands the same. It's still the same model. Today, as we are sitting here, if a vessel arrives or there is a potential vessel coming with a very ridiculous price, ridiculous means substantial discount, Gnpc cannot immediately act and buy the product because our hands are tied. But Jar Oil, as for Jar Oil, that restriction is non-existent. We can just call, confirm, and then get this product. And because we are not a monopoly, this is seriously impeding our business and our progress. And another one which is worthy of mention is the access to strategic lands, particularly state lands. And as a public corporation, we crave on government's intervention, perhaps through this committee, for Gnpc to be allocated strategic places or pieces of land for our network expansion. This is something that we have decried and we will continue talking about until resolved. Thank you very much.
Thank you so much.
Chairman of the head and members, including all represented here. I'm the finance director and I'm here to lead the financial performance and financial position of Gnpc in 2021. I'm not sure, we have the audit opinion where the auditor has to read that. Should I just get straight to the performance?
No, the external auditor will have it right now. Let's take us through the financial.
Okay. All right, thank you. I'm reading the financial statement from 1st January 2021 to December 31st, 2021.
Page number
11. Page number 11. In terms of revenue, as of 31st December 2021, Gnpc registered a revenue of $1,931,322,000. And the total cost of sales, which is the direct cost to that revenue, was $1,741,702,000, mainly the procurement of product. The gross profit as of 31st of December 2021 was $189,620,000.
Finance director.
Yes.
Cost of sales, huh?
Yes, cost of sales.
In the bracket, that is negative figure.
That is negative.
Okay.
It's negative. Okay, you want me to?
Yeah, we
okay.
want you to pronounce that.
All right, that's fine. So that's okay. It gives us a gross profit of $189,620,000 is positive. Other incomes, exchange gain or loss, negative $2,780,000. Other operating income, $69,413,000. Our operating profit, $256,955,000 is positive. Finance costs, $5,824,000 negative. Staff costs, $89,417,000 negative. Administrative costs, $65,126,000 is negative. Depreciation, $29,797,000 is negative. The total expenses of $190,164,000 is negative, all in bracket. Operating profit before tax was $66,791,000. The tax on the operating profit, which is negative, is $16,262,000. The net profit for the year was $50,529,000, that is after the tax, net profit after tax. Asset revaluation loss, which is negative, $4,216,000. So the profit and other comprehensive income as of 31st of December 2021 was $46,313,000. That completes the financial performance. You can move to page number 12, which is the statement of financial position. The assets of the corporation, and in this case, the non-current assets, property, plant, and equipment, as of 31st of December 2021, stood at $672,516,000. Equity investment, $179,173,000. A total non-current assets of $851,689,000. Current assets, cash and bank, as of 31st of December 2021, was $358,974,000. Trade, other receivables, and prepayments was $667,251,000. Inventory, stock, was $89,852,000. Total current assets stood at $1,160,077,000. Total assets, that is current assets and non-current assets, stood at $1,967,766,000. Equity and liabilities. The equity share capital is $20 million. Retained earnings, $710 million is $792,000. Revaluation reserve, $228,146,000. Total equity was $958,939,000. Current liabilities. Trade payables stood at $390,908,000. Other payables, $518,993,000. Corporate tax payable, $98,926,000. Total current liability was $1,008,827. Total equity and liability, $1,967,766,000. have the statement of changes in equity. Can we go ahead on that?
Yes. You want to go to the cash flow?
Well, yes. That will be the next page. So you want us to jump the equity one?
No, let's do it.
Okay. For the year ended 31st of December 2020, statement of changes in equity. The share capital, we have about 4 columns. And as at 1st January 2021, that is at the beginning of 2020, that is as at 1st January 2020 rather, our share capital was 20 million. And the retained earnings was 597,992,000, giving us a total of $599,992,000. Profit for the year, which in retained earnings, was $93,890,000. In terms of total, it's about $93,890,000 rather. Dividend declared was $6 million. Profit prior adjustment, $21,594,000. As of 31st of December 2020, share capital stood at 20 million. Retained earnings stood at $646,287,000, totaling $666,287,000. As of 1st January 2021, the share capital stood at $20 million, and the retained earnings stood at $646,287,000, total figure of $666,287,000. Profit for the year, $46,313,000. Dividend declared, $13,621,000. Negative, yes, bracket. Okay. Prior year adjustments, $31,813,000. Revaluation reserve, $228,146,000. As of 31st of December 2021, the equity stood at $958,939,000. Now we come to the cash flow. Statement of cash flow for the year ended 31st of December 2021. Operating profit before tax was $66,791,000 in 2021. Depreciation charges was $29,798,000. Increase in receivable was $249,071,000 negative. Increase in inventory was $54,500,000 in negative. Increase in payable, $256,733,000.
Decrease or increase?
Is increase because the decrease is in bracket. Prior adjustments, $31,813,000. Dividend, which is negative in bracket, $17,133,000. Cash used in operation was $64,430,000. Corporation income tax paid, $12,055,000 negative. Net cash generated from operations was $52,375,000. Cash flow from investing activities. Purchase of plant, property and equipment, $83,181,000 in negative. Dividend received was $17,113,000. Investment in shares, there was no investment in shares in 2021. Dividend declared, $13,622,000 in bracket, which is negative. Net cash used in investing activities was $79,670,000 negative. Net decrease in cash and cash equivalent, $27,295,000 as of 31st of December 2021. Cash and cash equivalent at the beginning of the period $386,269,000. Cash and cash equivalent at the end of the period, $358,974,000.
Thank you for the presentation. We can now switch to the audit part, starting with the complete.
Thank you, Honorable Chair. Please refer to page 7 of the financial statements. So just a summary as usual. Huh?
Yeah.
Independent auditors report to the shareholders of the Gambia National Petroleum Corporation, GNPC, auditor's opinion. We have audited the accompanying financial statements of the Gambia National Petroleum Corporation, GNPC, which comprises the statement of financial position, the income statement, the statement of changes in equity, the cash flow statement, and notes to the financial statements, including a summary of the significant accounting policies applicable to the corporation. In our opinion, the financial statements give a true and a fair view of the financial position of the corporation as at 31st of December 2021, and of its financial performance and its cash flows for the year then ended in accordance with the generally accepted accounting principles and in line with the requirements of the GNPC Act 2014. So there's an emphasis of matters. Should I read that paragraph for you? Or? No. Emphasis of matters. We draw, at the bottom, last paragraph. We draw attention to note 13 of the financial statements relating to cash in bank, which included 32.294 million relating to monies received from data sales and rental licenses. As stated in note 13A and 13B, the corporation received funds from data marketing companies as data sales investment fund on behalf of the government of the Gambia, and trading and resources received from international oil companies levied under block license agreement to facilitate the technical capacity building and resources needed for the industry. These monies are under the custody of the Gambia National Petroleum Corporation. However, the usage is primarily dictated by the Ministry of Petroleum and Energy. These funds are also offset by corresponding obligations recorded in Note 19 other payables. According to management, the Ministry of Petroleum and Energy dictates the primary use of this account. Furthermore, management could not determine an account for the corporation's share of the income from data sales and rental licenses, as this was not established by the government of the Gambia. Our opinion is not qualified in respect of this matter. This was signed by Augustus Prom, Registered Auditors, 9th of January 2023. Here, just the highest points. Please refer to page 5 of the management letter report.
Page 5?
Yes, please.
Yes.
Outdated manuals of the corporation. During our review of the key policy documents of the corporation, we noted the approved accounting manual and staff service rules book being outdated as follows. Accounting manual. The corporation is still using the accounting manual dated September 2012, and during our review, we noted the following elements in the accounting manual which is not in line with the current operations of the corporation as listed below. B. The staff service rules. The following was noted during our review of the staff service rules of the corporation. First was allowances not captured in the service rule book, and secondly, allowances stated without entitlement amount as listed in the table. Page 6, our recommendation. We recommend the management should ensure that the accounting manual is updated to ensure that all current processes and systems are reflected in the manual to ensure the objectives of maintaining the finance manual is achieved. Furthermore, the service rule book should capture all allowances paid within the corporation and amounts entitled under each allowance for clarity and also in line with recommended human resource practice.
Management response.
Accounting manual. The accounting manual is under review and will be submitted to the Board of Directors for approval once completed. For the service rule book, this is noted. However, management has reviewed the current staff service rule for submission to the Board of Directors for approval. It is imperative to note that the new staff service rule will incorporate all applicable allowances. Since the staff service rule is revised every 5 years, we will maintain capturing the various allowances by name without the amount, since the figures may vary year on year. And for your information, the staff service rule was submitted to the Board of Directors for approval.
Let me clarify that the board has already approved the revised service rules. But we've been advised by the State-Owned Enterprise Commission not to make any changes in salaries and allowances because this is being reviewed globally. So we've approved it at the level of the board, but the changes will not be effective until we hear from the State SOE Commission. This is just the update. This is as at the last board meeting. Thank you very much, Mr. Chair.
You're welcome. Please refer to page 7, Internal Audit Observation, A, Annual Work Plan. During our review of the Internal Audit Annual Work Plan, we noted the following areas of the financials of the corporation were not captured by the Annual Work Plan, as listed below: receivables, payables, taxation, petty cash, IT, and health and safety. B, terms of reference for the Audit Subcommittee. During our audit, we requested for the approved terms of reference of the Audit Subcommittee during the year under review, but the document provided is not approved and is still at a draft stage. Therefore, the committee is functioning without an approved terms of reference. C, key internal audit findings not implemented during the year. During our review on the internal audit quarterly reports, we noted the following high-risk findings being raised on a quarterly basis without implementation throughout the 4 quarters as listed below, mainly fuel stock losses, high pump attendance shortages, and coupons redeemed without signatures of MD. Recommendation, page 8. We recommend that the internal audit work plan should capture the areas highlighted above, which is key within the corporation, to ensure that all risks or irregularities occurring are addressed in a timely manner. The TOR of the audit subcommittee should be reviewed and approved by the board to ensure that all the objectives of the subcommittee are achieved. Findings raised by the unit should be looked into and addressed by management to avoid the same findings being raised in all 4 quarters by the internal audit unit.
Management response on page 9. Annual work plan. Medical audit is usually conducted on an ad-hoc basis. Receivable audit was conducted in 2019. However, there are plans to include receivable information technology and health and safety in the 2023 plan. The other areas identified will be assessed for inclusion in line with our available resources and level of risk attached. TOR of the Audit Subcommittee. Observations well noted. The Audit Subcommittee has recently made some advances to meet the board for the presentation of the 2021 Annual Audit Report and to also present the Draft Audit Subcommittee Charter, which includes the TOR for adoption and approval. Nonetheless, this will be conveyed to members to ensure faster implementation, as the chairman has recently been appointed as the Auditor General and the chairman of the Audit Subcommittee has recently been appointed as the Auditor General and he has to hand over the responsibility. Key internal audit findings not implemented. The management has now installed the automatic tank gauge system across all service stations to mitigate fuel stock losses. For pump shortages, drastic deductions and punitive measures have been taken by management currently to avoid pump shortages. Coupons redeemed without MD signature has now been resolved with the new coupon management system in place, which is an electronic automated system which redeems the coupon automatically. It is imperative to know that management is highly concerned about stock and is committed to minimizing it to the highest stock losses and is committed to minimizing it to the barest minimum.
Yes. Page 10.3, trade and other receivables, observation. A, review on opening and closing balances. A review was done on the opening and closing balances of the receivables and the following was noted. Opening balance had a difference of 1.2 million for GTSC and with closing balances difference of 1.2 for GTSC and 679,000 for Gun Petroleum. Page 11B, high number of receivables and negative impact on the working capital. During our review on the liquidity position of the corporation, we reviewed the percentage of the trade receivables on the current assets of the company, and we noted a continuous increment on the percentage of trade receivables against the total current assets from 29% in 2018 to over 50% in 2021. We further questioned the implementation of a 30-day credit policy of the corporation. C, NAWEC receivables of 1.364 billion. We noted the corporation is having an agreement with NAWEC to pay $4 million on a monthly basis based on the debt amount of $1.3 billion, which should take NAWEC 28 years approximately to complete the payment without any default on the payments. This is considered to be too long for the corporation to recover all the amounts due from NAWEC, considering the time value of money. And D, breakdown balance is not provided for the receivable balances. During our audit, we requested for the breakdown on the following receivable balances, but this was not provided for medical deduction, impress account, and net pay. As of 31st of December 2021, we noted the payroll control account with a closing balance of $708,000, which implies an overpayment of salaries. We further requested for a breakdown of the balance, but this was not provided by management. Page 13 recommendation, A. We recommend that the accounting balances are recalculated to ensure they are accurate to avoid any missing transactions that should be included in the financial records. And B. High amount of current assets. Management should ensure there's a higher percentage of current assets is tied to cash and cash equivalent rather than receivables to minimize the high risk of price changes and the forex fluctuations affecting the corporation negatively. C. NAWEC receivables $1.3 billion. Management should look into renegotiating the payback period, as it will position Gnpc in a much better financial position considering the material amount involved. And D. Breakdowns not provided. The receivables breakdown should be provided for audit review, and management should ensure that all receivables are adequately monitored to ensure listings and schedules are provided when needed. The net pay control account should be reconciled on a monthly basis after the payroll run.
Management response. Opening and closing balance differences. These differences are as a result of allocation of invoices against respective payments. However, the differences will be corrected in the subsequent period. High amount of receivable. The credit policy of the corporation has now been approved by the board of directors, and all credit sales to customers are being rigorously assessed and monitored on a daily basis to avoid such exposure. NAWEC receivable. This is noted. However, management deemed it reasonable to accept the $4 million monthly payment plan at the time as the financial situation of NAWEC was put into consideration. And additionally, management is engaging them to augment to a higher amount. Receivable breakdown and net pay control account. The breakdown will be reconciled to the closing balance and submitted for your verification. With regard to the net pay control account, these differences are mainly due to systems error on the loan history report as for the old system, the innovation system, because we migrated to a new system. However, management has commissioned and successfully migrated to a new payroll system in January 2022, which has addressed the reporting deficiencies.
Page 19, high risk inventory. The following was noted in our review on inventory. A. Purchase of fuel amounting to $235.5 million before GPPA approval. During our review on the following purchases of fuel made by the corporation, we noted the corporation purchased amounting to $231.5 million before the GPPA approval was granted for the following transactions listed below. B. No contract signed with fuel purchases amounting to $218 million. Upon our review on the approvals from GPPA on the acquisition of fuel, the approval stated award of contract and the Gnpc management is to send GPPA the signed contract document for verification and records. We requested for the contracts totaling to over $218 million under 3 different suppliers, but the contract was not provided for our review as listed below. C. Contract between Gnpc and GAT Global. During the period under review, we noted a contract was signed between the Gnpc and GAT Global for the supply of petroleum products, and the following was noted. 1. Supplying before the contract is signed amounted to $58.9 million. During our audit, we noted the corporation signed a contract with GAT Global 14th of September 2021 for the supply of 7,000 metric of PMS and 20,000 metric of AGO. We noted the corporation made the following purchases amounting to $58.9 million before the contract was signed as listed below. Delayed delivery. The duration of the contract was 1 year, but GAT Global was able to supply for only 2 months, September and October 2021, and was unable to supply the remaining months. Section 13, subsection 2 states that a delay in the delivery of more than 1 week by the supplier shall render the supplier liable to the imposition of liquidated damages calculated from the expiry of the contractual period, and such damage being fixed at 1/1,000 of the value of the undelivered goods for each day the delay lasts. damage in aggregate shall not exceed 10% of the total contract value. Upon our review, we noticed there was no action imposed on the supplier for the delay, leading to a cancelled contract, leading to GNPC buying from other suppliers. B, page 21, receivable of $342,400 from PSTV. The agreement between the corporation and PSTV for the supply of fuel stated that PSTV will pay the transportation and throughput, but we noted the corporation made the payments for transportation and throughput, leading to an overpayment of $342,400. Upon payment to PSTV, we noted that the transportation and throughput paid by the corporation was not deducted, and the amount is still yet to be refunded to the corporation as of October 2022, which is 1 year, 9 months, still pending. Our recommendation, page 22. Management should ensure that all fuel purchases go through the GPA approval and contracts are in place and signed before any supply to ensure that the corporation is adequately covered. The delayed delivery clause should be enforced to protect the corporation against cancelling contracts and moving to other suppliers with unfavorable prices, leading to financial losses. PSTV should be engaged to settle the outstanding amounts immediately.
Management respond. Purchase of fuel. Management respond. Purchase of fuel before GPA approval. It must be noted that these procurements were conducted in very difficult times in the supply chain of petroleum products in the country, where quotations are evaluated and recommended for award. But suppliers would insist on payment before release of the product. To keep our station operational, we had to go ahead with the payment for the procurement and send the request for approval to GPA. However, because of the bureaucracy in getting approval from GPA, these payments were done while we wait for the final approval, as we cannot also shut down our stations. Contracts not maintained for the fuel purchases. It must be noted that these procurements were one-off and based on the internal transfer (ITT), where immediately the supplier received payment. All the products are transferred in the name of the corporation at Gnpc storage depot. Guide contract. This was done based on mutual agreement with the corporation and Guide Global for the product to be supplied while the necessary review of the contract document was ongoing. It must also be noted that the supplier only supply internal transfer, that is ITT, basis, where the product quantity are only paid when the product is transferred in the name of the corporation at the depot. With regard to the delayed delivery, this is noted. Now that the contract has expired in October 2022, management will take necessary actions against the supplier for non-performance. PSTV. The Gnpc PSTV suppliers were paid through a letter of credit, value based on the minimum contractual value, which includes the total premium value. Considering the minimum deferred payment of 60 days, Gnpc/NAVEC, it was agreed for Gnpc to invoice the entire transaction premium, and in return, it was agreed for PSTV to invoice the entire transaction premium, and in return, Gnpc throughput and transport costs either in molecule or in cash. Over time, Gnpc realized these on a molecule basis. However, during our review, we realized the difference of the aforementioned amount that management is pursuing to receive the receivable either by molecule or cash.
Page 30, IT.
25.
Oh, sorry. 25 trade payables, observation A, non-moving trade payables. Upon our review of the trade payables of the corporation, we noted an amount of 6.6 million captured as trade payables that has not moved for a period of 2 years as listed below. B, negative supplier balances. Upon reviewing the trade payable listing, we noted the following trade suppliers with a negative balance, which is not expected as listed below. Our recommendation, we recommend the management should look into the above payables and ensure all payable balances are valid and obligations exist to settle. All negative payable balance should be looked into and reconciled to ensure that the closing balances are accurate.
Page 27, management response, non-moving trade payables. Reconciliation has been conducted with most of these suppliers, and all unsubstantiated balances will be adjusted accordingly in the subsequent periods. Negative supplier balances, the balances will be reconciled and adjusted for in the subsequent period.
Page 30, information technology. A, IT policy document. Upon our review on the IT policy document of the corporation, we requested for the IT policy, which was provided dated back to January 2018. Upon further discussions with the IT management team, we requested for evidence of approval, but it was confirmed that the document has not gone through the review stage and then approval to make it an official policy of the corporation. B, disaster contingency recovery plan. During our discussions with the IT personnel about data backups, he said backups are normally done on a weekly basis on a hard drive. We requested for a disaster contingency recovery plan, the DCRP, but it was confirmed that the disaster recovery plan is not maintained. Recommendation on 31. We recommend the management should ensure that the IT policy document is reviewed and approved for immediate use by the IT department, and a disaster contingency recovery plan should be developed and updated on a regular basis in line with recommended IT management practice.
Page 31, management response. The draft IT policy is under review and will be submitted to the Board of Directors for approval. With regard to the disaster contingency recovery plan, DCRP, the management will develop disaster recovery plan and software for implementation.
Page 35, staff loans, observation A, joint insurance. According to the staff loan policy of the corporation, employees should submit insurance in a joint name between the employee and Gnpc, alongside the bill of sale executed to Gnpc. Upon our review on the staff loans issued during the period for vehicle and motorcycle loans, we requested for a joint insurance and bill of sales, but this was not provided for our review, as listed below. Upon further discussions with management, it was confirmed that the vehicles or motorcycles were not purchased by the beneficiary or staff. B, vehicle, motorcycle for commercial purposes. The following staff below were given vehicles and motorcycle loan respectively, but it was noted that the loan was used to buy a vehicle for commercial purposes and no evidence of insurance, which was a taxi and a van. C, guarantors during the loan process. We noted from the loan application process that there is no limit set for the number of times a staff can be a guarantor or a limit of amount to be guaranteed to ensure that the objective of using a guarantor is not defeated. Our recommendation, page 37. We recommend that management should ensure that there's joint insurance and bill of sales are obtained and filed to be in compliance with the loan policy, and to ensure that the loans are backed with collateral to minimize the risk of non-performing ex-staff loans. Management should ensure that loans given to employees are used for the intended purposes and not for obtaining commercial vehicles. The guarantor system should be looked into further to ensure that the objective of using a guarantor is achieved by ensuring that the limits are imposed on the guarantor.
Page 37, management response. However, the issue of staff who have not honored their vehicle or motorcycle loan was thoroughly examined by a committee made up of admin, finance, audit, HR, and legal. The committee came up with a measure to tighten the control of the vehicle/motorcycle loan process. Staff applying for motor vehicle or motorcycle loan who do not provide guarantors will have to provide a valuable collateral. The collateral's worth should be above the loan amount. Staff who are not able to provide an individual collateral will need a guarantor in possession of a valuable collateral. Currently, all defaulters are not entitled to any kind of loan, 1/6, and monthly vehicle allowance or fuel. Few of the staff in your list have recently honored their loan by buying vehicles or motorcycles. With regard to guarantors, the management will set limit and monitor as recommended.
Page 38, point 13, uncredited deposits in the bank. Observation. During our review and the reconciliations review of the cash book and bank statements as of the year ended 31st December 2021, it has come to our attention that the following uncredited deposits have not cleared at the end of the year, and most of them are dating the first quarter and second quarter in 2021, i.e., in a range of 6 to 9 months and still outstanding to be recognized in the bank statement of the corporation. EcoBank, BSIC, Skybank, FBN, and Guarantee Trust. FBN and Access. Page 39, recommendation. We recommend the management should engage the banks to ensure that these transactions are investigated immediately and ensure that the amounts involved are credited to the various bank accounts of the corporation.
Management response, page 39. These uncredited items are identified during our reconciliation processes. However, all the banks have been contacted because the transactions are supported with signed and stamped certificates of the respective banks. Management will continue to follow up with the bank to ensure the amounts are credited, and most of this amount has been recovered. It has been now deposited to our account.
Page 40.14, confirmation spendings. During our review of the receivables and payables, confirmations were sent to following third parties, but responses were not received to complete our review on the following balances: receivables as listed below and payables as listed below. Page 41, recommendation. We recommend the management should ensure that third parties are responding to confirmations to complete the review process, and also ensuring that the records maintained by Gnpc are accurate.
Page 41, management response. Management is pursuing with all pending confirmation for their submission.
Page 42.15, assets observation. A, annual asset verification. We requested for the annual asset verification report, but it was confirmed that this exercise was not conducted. And B, asset tagging. During our verification, we noted that none of the assets of the corporation were tagged for identification by management. Page 43, recommendation. We recommend that management should conduct an annual asset verification exercise and is documented for verification purposes, and this will enhance controls and utilization of the assets. And B, asset tagging. We recommend that management should ensure all assets of the corporation are tagged.
Management response, page 43. Management will ensure all assets are tagged now that the fixed asset valuation report has been concluded and uploaded into the accounting system.
Thank you. Can we proceed to the prior year on resolve? Those that are not implemented, please.
Page 45, PPE, point 2, land ownership documents, allocation letter. We noted the following landed properties with only an allocation letter from the Department of Lands and Surveys as listed below. Not implemented. Internal audit review, late approval of annual work plan not implemented, outdated manual not implemented, risk register not implemented. That's a 2021 budget. Corporate income tax. During the course of the compliance review of the income tax, we noted the tax charge is based on 1% of turnover and not a higher of 1% of revenue or 27%, not implemented. Cash collection, lack of insurance, not implemented. SOE's cross areas, not implemented. Ex-staff loans, page 48, bottom table. Evidence of follow-up for ex-staff loans not provided. This was not implemented. Page 49, difference between staff loan ledger and listings not implemented. Payables breakdowns not implemented.
52.
Stock loss on oil and lubricants. We noted stock loss with this particular product. This was not implemented. Upstream fund utilization approval not implemented, and policy on the upstream funds not implemented. Thank you.
Thank you so much, Mr. Lorico. Really appreciate. Chairman, we have come to the tail end of the presentation. I would definitely want to ask if you have anything to say before we finally close.
Thank you very much, Mr. Chair.
Yes?
A lot of the issues raised by the auditors over the years have been tackled. Recently, we've been reviewing the manuals and the procedures. We've approved the staff rules. I think there is an IT policy document now approved by the board. So there has been a lot of improvement since the 2021 accounts were reviewed. And hopefully when we come to the discussion on Wednesday, we will be able to give you an update of what the current situation is in 2023 and 2024.
Okay, thank you.
The auditors were very thorough in their analysis and in their report, and we thank them for that. And it is very helpful because this is what we need. We need to be told where we are going wrong, and so that we can improve. So we thank the auditors for their diligence and for the thorough job they do. Thank you very much.
You're welcome.
Thank you very much, Honorable Chair. Before you wrap up as the Vice Chair, I want to seize the opportunity to thank the management and the auditors for their interaction. I'm optimistic to say that there's a new system in place from 2022, 2023. There's a new caliber of people occupying the leadership of Gnpc. And I want to reassure you that it's all geared towards nation building. It's not a witch hunt. And then I hope and pray come Wednesday it will be more interactive and more engaging. I will be unavoidably absent because I won't be here, but I know every chairman will make sure that there's justice done to the topic. However, yes, and the team as well. However, Chair will permit you, if I have any concern, I'll be sending them in the group chat while we're away. So we want to thank you so much for your compliances, and thank you so much for service to the nation. Thank you.
Thank you very much.
Finally, Mr. Chairman and the board representative with the senior management, we are really very much happy for the presentation. And as I stated in my initial statement, that we really thank you for your congrats and congrats for the new position. It's a new challenge. We are very hopeful that you will live up to expectation. And thank you so much for the good work that the audits were very detailed and trying to pinpoint every anomalies in the system. So it's intentionally done for us to improve upon it. Going forward, we live up to expectation. And detailed engagement will come on Wednesday when you will be here for consideration. My members are here, they are going to critique all this document. A lot of questions are going to be posed to you. And we need detailed response in order to make a decision whether we are going to apply. On that note, I want to thank you and say good afternoon to you all, and wish you a safe journey back to your various destinations. Thank you.
Thank you very much, Mr. Chair, and foreign members of the state. We look forward to the meeting on Wednesday. Thank you.
Okay. Can someone move a motion for us to adjourn?
I move a motion that we adjourn till Wednesday or Tuesday, 10 and prompt.
Those in favor, please say aye. Those not in favor, please say aye. The meeting is now adjourned till Wednesday, Tuesday 38 by 10 a.m. prompt. So finally we are closed.